But from reality now, let's go to a conversation around cement at present, where Arpit Bhatt is now joining us to tell us what's looking good as a pick of the week. Arpit Bhatt from AGC Securities. Arpit, good morning and welcome. Let's tell us what's the pick of the week.
Good morning, Piyush, and good morning to all the viewers. So the pick of the week from our side for this week is Heidelberg Cement India Limited, which is into the cement sector. Now it is a subsidiary of a global major Heidelberg Cement Group, which is based out of Germany, but has operations in more than 60 countries. It has about 195 million tons of capacities globally. Talking about its Indian operations, it has about 5.4 million tons of capacities in India, majorly concentrated in the central region, with capacities majorly in Madhya Pradesh and Uttar Pradesh. Karnataka having a small portion at about 0.7 million tons of capacities. Now, talking about what works in favor for the company, first of all, the cement sector has been favorable as an investment opportunity for past 3 months or so. So, if you talk about all the cement players, the cement players from central India, they are expected to do well majorly on account of the demand-supply dynamics, with the demand expected to grow in the coming cycles, whereas the capacities that are expected to be added are not that much. Are not expected to grow to that level. This will help the existing regional players which have established their own market share with a established brand to up their utilization levels. The same can be witnessed for Heidelberg as well, where its utilization for the current 9 months of FY19 has been around 91%, which is pretty high. Also, as you must be aware that there have been certain price hikes that have been taken across India in the cement sector.
Right. So, Arpit, you have hit the point here. Now, you're talking about a 91% utilization. That definitely sounds good for the margin outlook here. But in terms of central pricing outlook, central India, a bit of East India, a bit of Uttar Pradesh region, a bit of Madhya Pradesh, Jharkhand region, how's the pricing so far has been and what's the outlook looking to you?
So, the pricing has been strong. So there is some amount of consumption demand is expected to dip in the coming 3 to 4 months. That is on account of the elections that are going on. So in the 6 months period surrounding the elections, consumption dips to some extent, but the same is expected to pick up post June. And once that is out of it, then we expect the prices that are there currently, the realization should grow at around 3 to 4% CAGR for next 2 years.
Right. And for now, if I want to come back to the question, the pricing realization in the fourth quarter, has there been an increase of 3 to 5% versus the last quarter, or you are seeing a similar sort of price? Because we have seen price hikes, strong price hikes in south, we have seen a mild price hikes in north. For the central and the eastern India region, how has been the price hike?
So price hikes have been somewhere close to 15 to 25 rupees per bag of 50 kgs. So that is what is expected, and that all of that has taken place post in the month of February and March. So yeah, the fourth quarter should see some amount of increased realizations for cement players across India, and some mild advantages can be witnessed in the central Indian players as well.
Right. And on a relative valuation basis, do you believe the stock is trading at fair valuation at present or attractive valuation? Because your target price is in the range of 190 to 211. So is the stock at present trading at attractive valuations?
So it is current, if we go by the EV by ton valuations, it is currently trading at around 115 per ton, 115 in terms of dollars. So that is a little rich valuation for a company having capacities in the range of 5 to 10 million tons. But when we look at the kind of return ratio that it has been generating and the kind of EBITDA that it has been generated per ton, it is at par with the players having large capacities like ECC and Ambuja. So, the rich valuations are justified, and with growing revenues and higher margins and protected return ratios in the coming fiscals, we expect the valuations to go down further, and we can, so on an FY21 basis, it will be close to $105 per ton. So, yeah, we can expect some amount of upside in this company.
Right, $105 is not bad at all. Arpit, thanks a lot for coming on the show and giving us insights into your pick of the week. That's Heidelberg Cement. Now, in the cement space,